What if I told you that you could plant the seed for serious financial growth with just $1,000? Not talking about getting rich quick schemes, all right? I'm talking about setting yourself up for the long haul. We're going to break down how to invest that $1,000 in 2025 to potentially see some serious returns. Whether you're just starting out or looking to diversify, stick around. I've got 5 solid options for you. All right, let's talk stocks. Now, I know what you might be thinking. Graham, the stock market, isn't that a risky game for people with way more money? And yeah, it can be volatile, but it's also one of the most powerful engines for building wealth over time. Think of it like this. When you buy a stock, you're buying a tiny piece of a company. As that company grows and becomes more profitable, the value of your piece grows too. Now, with $1,000, you're not going to be buying up Apple or Tesla outright, but here's the beauty of it. You don't have to. You can start small with something called ETFs, or exchange-traded funds. Think of these like baskets of stocks that track a particular market sector: tech, energy, healthcare, you name it. They're a great way to diversify your investments without needing a ton of capital up front. Another option, individual stocks. Now, this requires a bit more research, but it can be incredibly rewarding. Look for companies with solid track records, strong financials, and a competitive edge in their industry. Remember, investing in individual stocks is like placing a bet on a horse. You want to make sure you're backing a winner. But here's the golden rule, folks. Never invest money you can't afford to lose. The stock market has its ups and downs, and it's important to be prepared for the ride. Do your research, start small, and don't be afraid to ask questions. And now maybe the stock market feels a little too intense for you right now. The constant ups and downs, the need to stay updated with every market move. It can be overwhelming. You want something a bit more hands-off, a bit more set it and forget it. Something that allows you to invest without having to constantly monitor the market. Well, my friend, let's talk about mutual funds and index funds. These investment vehicles are designed to make your life easier while still growing your wealth. These are like the cruise ships of the investing world. Smooth sailing, diversified, and perfect for those who prefer a more passive approach. Imagine being on a cruise where everything is taken care of for you. So how do they work? How do these funds manage to offer such a seamless experience? Essentially, these funds pool your money with that of other investors and then invest in a diversified portfolio of stocks, bonds, or other assets. This pooling of resources allows for greater investment opportunities. Think of it like a team of expert investors managing your money for you. They have the knowledge and experience to make informed decisions. They do the research, they make the trades, and you get to reap the benefits. It's like having a personal financial advisor without the hefty fees. Index funds, in particular, are great for beginners because they track a specific market index, like the S&P 500. This means you don't have to worry about picking individual stocks. This means you're automatically invested in the top 500 companies in the US, giving you instant diversification and reducing your risk. It's a simple yet effective way to invest. The beauty of mutual funds and index funds is that they offer a low-cost, low-maintenance way to invest in the market. You don't have to spend a lot of money to get started. You don't need to be a financial expert to get started, and you can invest with as little or as much money as you'd like. This flexibility makes it accessible for everyone. Plus, they're incredibly tax efficient, which means more money in your pocket in the long run. Tax efficiency is a crucial factor in maximizing your returns. Now, I know what you're thinking. Graham, these sound pretty great, but what's the catch? Is there a downside to these seemingly perfect investment options? Well, the main downside is that your returns might not be as high as if you were picking individual stocks. However, the trade-off is the reduced risk and effort. But for many investors, especially those just starting out, the stability and diversification these funds offer are well worth the trade-off. It's a balanced approach to growing your wealth. Chapter 3. Be a real estate mogul, sort of, exploring real estate crowdfunding. All right, let's talk real estate. Now, I know what you're thinking. $1,000 isn't going to buy me a mansion in Malibu, Graham, and you're right, it probably won't. But here's the thing, it doesn't have to. Thanks to the magic of the internet, there's a new game in town called real estate crowdfunding. Think of it like Kickstarter, but for property. Platforms like Fundrise and Realty Mogul allow you to pool your money with other investors to buy a piece of real estate, everything from apartment buildings to commercial properties to those beachfront condos you've been dreaming of. Now, the great thing about real estate crowdfunding is that it gives you access to deals that were previously only available to big-time investors. Plus, it can be a great way to diversify your portfolio and generate passive income through rental payments or property appreciation. Of course, like any investment, there are risks involved. Real estate markets can fluctuate, and there's always the possibility that a property could lose value. But with careful research and due diligence, real estate crowdfunding can be a smart way to dip your toes into the world of property investment without breaking the bank. And hey, who knows, maybe one day that $1,000 investment will help you buy that dream vacation home. Chapter 4, Riding the Digital Wave. Navigating the world of cryptocurrency. All right, let's talk about the future, or at least one version of it. A future where digital currencies are not just a novelty, but a fundamental part of our financial ecosystem. Cryptocurrency. It's the buzzword on everyone's lips, the technology that's shaking up finance, and yes, it can be a bit of a wild ride. From Bitcoin to Ethereum, these digital assets are making headlines and capturing imaginations. But with high risk can come high reward, and with $1,000, you can dip your toes into this exciting new asset class. It's like stepping into a new world, full of potential and opportunities. Now, I'm not going to sit here and tell you that cryptocurrency is a surefire way to get rich quick, far from it. The market is unpredictable, and fortunes can be made and lost in the blink of an eye. It's volatile, it's complex, and it's still in its early stages. The technology is evolving, and with it, the market dynamics are constantly shifting. But it's also clear that digital currencies are here to stay, and they have the potential to revolutionize the way we think about money. Imagine a world where transactions are faster, more secure and decentralized. So, where do you even begin? The world of cryptocurrency can seem daunting, but starting small and educating yourself can make a big difference. Well, with $1,000, you could start by diversifying into some of the more established cryptocurrencies like Bitcoin and Ethereum. These are the giants of the crypto world, often seen as safer bets. These are the blue chips of the crypto world, and while their prices can fluctuate wildly, they also have the potential for significant long-term growth. Think of them as the foundation of your crypto portfolio. Another option is to explore the world of altcoins. These alternative cryptocurrencies can offer unique opportunities and innovations. These are smaller, lesser-known cryptocurrencies that often focus on specific niches within the blockchain space. They can be intriguing investments if you do your homework. Think of them like penny stocks. They carry a higher risk, but they also have the potential for explosive growth. It's a high-stakes game, but the rewards can be substantial. But here's the thing about cryptocurrency. It's not for the faint of heart. The market can be a roller coaster with highs and lows that can test even the most seasoned investors. Before you invest a single dollar, do your research, understand the risks involved, and never invest more than you can afford to lose. Knowledge and caution are your best allies in this digital frontier. Chapter 5. Playing it safe, maximizing returns with high-yield savings accounts and CDs. Now, maybe you're watching this thinking, Graham, I appreciate the enthusiasm, but I'm not quite ready to dive into the stock market, real estate, or the wild world of crypto. And that's totally fine. It's important to recognize your own comfort level and risk tolerance when it comes to investing. And that's totally fine. Not everyone is comfortable with the volatility and unpredictability that comes with high-risk investments. Not everyone's cut out for high-risk investments, and that's where our final option comes in. High-yield savings accounts and certificates of deposit, or CDs. These options provide a safer alternative for those who prefer a more conservative approach. Now, I know what you're thinking. Graham, those are about as exciting as watching paint dry. And you're not wrong. They might not have the thrill of high-stakes trading, but they serve a crucial purpose in a balanced financial strategy. They're not going to make you rich quick, but they offer something that's incredibly valuable. Stability and peace of mind. Knowing that your money is safe and growing steadily can be a huge relief. But they offer something that's incredibly valuable: stability and peace of mind. In a world where financial markets can be unpredictable, having a portion of your savings in a secure place can help you sleep better at night. High-yield savings accounts are exactly what they sound like. Savings accounts that offer a higher interest rate than traditional savings accounts. This means your money grows faster while still being easily accessible. They're FDIC insured, which means your money is protected up to $250,000, and they allow you to access your funds whenever you need them. This combination of safety and liquidity makes them an attractive option for many. CDs, on the other hand, require you to lock your money away for a set period, typically ranging from a few months to several years. This commitment can be a bit daunting, but it comes with its own set of benefits. In exchange for this commitment, you'll earn a higher interest rate than you would with a savings account. The longer you commit, the higher the rate, which can significantly boost your savings over time. Now, I know what you're thinking. Graham, these interest rates are still pretty low, and you're right, they're not going to make you a millionaire overnight. But that's not their purpose, and you're right, they're not going to make you a millionaire overnight. However, they do provide a steady and reliable way to grow your money without the stress of market fluctuations. But they do offer a guaranteed return on your investment, which is more than you can say for many other asset classes. This guarantee can be particularly appealing in uncertain economic times. Plus, they're a great way to preserve capital and protect yourself from inflation. By keeping your money in a high-yield savings account or CD, you can ensure that it retains its value over time, even as prices rise. Start investing today. So, there you have it, 5 solid ways to invest that $1,000 and potentially watch it grow. Whether you're feeling like a stock market guru, a real estate tycoon, or just want to keep things safe and steady, there's an option out there for you. Remember, the most important step is to just start. Don't wait for the perfect time or until you have a ton of money saved up. Every little bit counts, and the sooner you start, the more time you have to let the magic of compounding work its wonders. If you found this video helpful, hit that like button below and subscribe to the channel for more financial tips and tricks. And be sure to let me know in the comments which of these investment strategies you're most excited to try out. Remember, the best investment you can make is in yourself. Stay informed, stay curious, and I'll see you in the next video.